Hello everyone and welcome. Thank you for joining us today's webinar entitled Changing Customer Experience in China's Banking Industry, brought to you by Kapronasia and GMC Software. My name is Zenon Kapron and I will be acting as the moderator as well as providing the first part of the presentation for today. A decade ago, going to the bank in China meant queuing for an hour and suffering what was often very poor customer service. In a retail banking market with limited competition, there was little push to do anything different. Today, the industry is shifting rapidly. With online payment platforms like WeChat Pay and Alipay, digital payments are a reality for customers. Financial product distribution platforms like Lufax and CreditEase make it incredibly easy for customers to invest their money. Peer-to-peer lenders are bringing new financial products to market and choices. Customer communications has gone from an afterthought to a key part of a bank's strategy. Kapronasia and GMC are pleased to bring you this webinar today, specifically focused on the topic of development of customer communications in China. Based on the Speaking to the Customer report, this informative webinar will discuss the historical developments in the banking industry and chart how we got to where we are today, as well as discuss how these new players are disrupting the market by providing better customer experiences and communications. Finally, we'll look at the lessons that traditional service providers can learn from today's industry transformation, point out some key factors of success, and highlight actions firms need to take in their businesses now in order to be ready for the future. During this 45-minute webinar, we'll look to answer these questions and discuss the critical trends and provide insight into what's happening in customer experience in China. I will start off with about a 10-minute, 15-minute overview of what we are seeing happening in the industry as Kapronasia, and then my co-panelists for today, Antoine Hemon-Loren, who is an expert in CCM and customer engagement solutions at GMC, will be presenting the second half of the presentation. Before we get started, just a couple pieces of admin. I need to inform you that today's session is being recorded and is run in listen-only mode. However, we really want to encourage feedback and questions from you throughout the webinar. And since we always get a lot of questions, we're going to get through the presentation in about 30-35 minutes and spend 10 or 15 minutes on our question and answer session. To facilitate the discussion, we'll use two features of the webinar software. The first is the viewer window, where you'll see the presentation, in which I recommend maximizing now so you can see it in full screen. The second is the control panel, where you can interact with us. The control panel can be opened and closed by clicking on the arrow button on the Grab tab. In the control panel, you are welcome to submit questions and comments to our presenters, myself and Antoine. We will be answering many of these as possible throughout the presentation at the conclusion of the webinar as well. With all of that housekeeping out of the way, let's get started. So what I wanted to do first today was tell you a little bit more about what we're seeing as Kapronasia and what's happening in the market. Earlier this year, we did our 2017 Financial Industry Trends Report for China. And clearly, there were two themes that really came out in that report. The first was how to manage innovation and change in a declining economic and financial industry situation and digital. You know, in many ways, if we look back at 2016, and now that we're into 2017, many things were almost the same as we saw the previous year. So in December 2016, we saw one of the airpocalypse days in Beijing, where the AQI reached nearly 500, which was 50 times the WHO recommended amounts. And we continue to see failing P2P deals, foreign companies struggle, and challenges for the industry as a whole. In addition, systemic issues still exist. So when we look at things like China's foreign reserves or growth in GDP, these are two metrics in which China is still kind of struggling. And with the questions about the Trump presidency and what impact that's going to have on China, there's still questions going forward in the future. And banks are struggling. This chart that we have up on the screen now, as many of you know, bank interest rates were fixed for many years. And this chart shows the margin that banks get from lending and paying deposits. So basically the line on the top, at the very top there, was the maximum amount that banks could lend at. So when they were lending out money to any of the borrowers, whether they be retail or commercial borrowers, and the line on the bottom is the minimum amount that could pay deposits. So in theory, a bank's margin would be the entire amount between that. But we can see from the line in the middle, the blue section in the middle there, that banks' margins are increasingly becoming squeezed. If you look back at 2004, we can see that bank margins were nearly 3%, and now today they're hovering around 1%, which puts banks in a very challenging position. At the same time, we have these other companies like Ant Financial coming to market. Ant Financial is a huge fintech, potentially the biggest fintech in the world. It's got a $60 billion valuation, millions of Alipay users, and millions of transactions every day. And it's getting into lending. So between 2010 and 2016, it lent 750 billion renminbi. And an interesting statistic, 1 in 4 Chinese consumers born after 1990 now uses Ant Credit or Pay. So the Sesame Credit platform or the payment platform. So this is a huge part of the market now, these new digital platforms that are coming into play. And increasingly, that means the spend is shifting to digital. So when we look at the progression of retail consumption by payment type, we can see on this chart how it's shifting from cash, China being traditionally a cash-based society, and moving much more into a digital focus. So we can see that in 2020, our estimates are that 30% of transactions will be cash as opposed to 2010, where nearly 60% are cash. So we're seeing this entire shift away. So if we think about the scenario for organizations in China, it's getting very difficult. On one side, the market fundamentals, the GDP, the growth of the market is slowing. And on the other side, you have these competitors like Ant Financial, Lufax, and Tencent that are coming to market with brand new solutions. The problem with a lot of these new solutions that are coming to market as well is the fact that they don't go on traditional systems. So if you look at a Alipay or WeChat Pay, China UnionPay is not involved in that transaction. China UnionPay being the traditional switching provider for retail payments here in China is not part of that equation when a transaction is made on Alipay and WeChat Pay, and nor are the banks. So effectively, when I make a payment using Alipay, the banks have no ability to see what's happening with that transaction. And so increasingly, we're seeing these digital payments shifting the focus away from traditional banks to these third-party providers. This is just an example of some of the screenshots. I mean, this is a transaction that you could do on the WeChat wallet, and you can see that in the first slide, we pick WeChat as the payment method. In the second frame, we choose whether we want to fund it from our debit card or use our balance from our wallet. And the only information that ICBC in this case would see is a small amount of information that says this amount of money was debited from your account. We have no idea where the transaction is going, where the person's made the transaction, and what the transaction was for. This is also straining traditional providers of payments because it's moving even offline commerce. So increasingly we're seeing this use of QR codes for transactions. In 2014, Alipay was running a promotion where basically anybody who signed up a merchant could get 300 renminbi. So this meant a lot of people were signing up merchants to accept Alipay payments, and increasingly payments were shifting away from traditional providers. Using these QR codes, even for myself here in China, I rarely use cash on a daily basis. And it's really shifted the way that millions of Chinese transact on a daily basis. Now, why is all of this relevant? Well, it's relevant because customer communications is becoming increasingly critical for these organizations. The ability for a traditional bank to better engage and keep the attention of their customer is very important, because there's a couple of things that are happening as we're seeing this shift to digital finance. The first is fees. So if you look at this chart, we can see that in 2015, banks lost 152 billion renminbi, so nearly 20 billion US dollars in card fees in 2015. So this was basically some information that we found by looking at the amount of transactions that would have traditionally gone across a card payments network that were going across one of these digital platforms instead. So $20 billion in card fees were lost from the banks in China UnionPay. Now, that by itself is a large number. But when you think about some of these organizations, they have huge balance sheets. So to a certain extent, to an ICBC, this $20 billion is a bit of a rounding error to a certain extent. But what's also more important is the loss of transaction data. So we can see on the screen two sets of data. And the first row or so that we see there, those are 3 transactions that were done using WeChat Pay and Alipay. And basically what it says, although it's in Chinese, I'll roughly translate for you, is just the name of Shenzhen Tenpay, which is WeChat Pay, and Alipay. So those show up as the merchants on the data. So those are transactions that people have done with Alipay and Tenpay, or essentially WeChat Pay, in the market area. Now, what's the challenge with that is that all the bank can see is that it was a WeChat Pay transaction, and it was for 99.85 renminbi, 90 renminbi, and 61 renminbi. There's no data behind that. We don't know where the transaction was made. We don't know who it was made for. We don't know what the goods are. Now, if we look at the bottom on that third row, the second row is just a duplicate of the first, but the third row is 3 transactions that were made using Apple Pay. And so on these, you can see that the first transaction was made at a Lawson's. The second transaction was made on a Family Mart, and the third transaction was made at Shanghai Family Mart. So you can see there's a lot more data that's exposed when these transactions go across Apple Pay or one of the traditional networks. So although the fees hurt, the loss of data is even more critical. And that's especially painful when big data is critical for the future of finance in China. 2 examples that I wanted to share with you today. The first one is the Bydou Xfile 100 Index Fund. So this was essentially a fund that Bydou set up a number of years ago that used anonymized search information and combined that with the CSI 100, which is the Shanghai Index 100, to create a financial product called the Xfile 100. And so for the first couple of years that the Xfile 100 was in the market, it was beating the market by 7 to 8%. So this is an example of how data is being used to create a financial product. The second most obvious example is Sesame Credit. So this is a new platform from Ant Financial that allows individuals to have credit scores. And one of the challenges in China has always been that there hasn't been a centralized database of credit information. So that challenge was addressed a couple of years ago by the PBOC, the People's Bank of China, the central bank, by selecting 8 technology companies to provide credit rating services in China. So what Ant Financial is doing is basically using a number of different data sources to provide a credit profile for the customers in China. And this is proving very effective not only for Ant Financial, but other companies that are using that data to create other financial products. Lufax is another great example of a company that's really at the edge of FinTech in China. And Lufax is using all of this data to create new products and services for customers. It's another one of the FinTech unicorns. It's rated as one of the top 5 by valuation companies, FinTech companies around the world, with an $18.5 billion US valuation, and it has an IPO target later this year of about 50 billion. Lufax has 300 plus billion renminbi assets under management, 6 million active investors, and 2 million borrowers. This is a huge platform, and it's completely excluding existing organizations. And how is it doing that? It's by using this data. Increasingly, that means that as we see these platforms increasingly gathering market share in the wealth management space. This is some data that we pulled together about the wealth management market share in China. And you can see in 2015, most of the wealth management products were distributed through banks, traditional financial institutions. So essentially, you would go to your bank or your traditional financial institution and you would say, I'd like to buy this wealth management product. The bank would package it up and then sell it to you. Increasingly, we're seeing this digital distribution. So not just with the BAT, the Baidu, Alibaba, and Tencent, but with third-party institutions. And so by 2020, we believe that they will have nearly 30% of the wealth management market share. Now, this really matters for customer communication because, as I mentioned before, the relationship is shifting away from the traditional financial institutions to these third-party platforms. So you can see in this graphic, we have the products on the far right, the equity products like the stock products, insurance, money market funds, time deposits, fixed income. Traditionally, those would be distributed by companies like Tianhong or China Asset Management. Those would be household names. But increasingly, because these products are being distributed through these third-party platforms like Tencent, like Lufax, like JD Finance, the investor knows these brands and they don't know the underlying financial institution. So this is really why more effective customer communication is really important going forward, because these relationships are increasingly shifting away from the traditional financial institutions. Along with GMC, we did a survey last year looking at what millennials thought. and we asked them a number of questions about what they thought about their banking relationship and their bank and their future within the financial space. So basically, how did they think that they would use finance in the future? The first question we asked was, what if these feelings describe, which of the following describes your feelings about your bank? I enjoy banking with them, I don't enjoy banking with them. In this respect, it was fairly positive for the banks. 59% of the respondents said that they enjoyed banking with their bank, and only 40% said no. But the survey started to go downhill from the bank's perspective from there. The next question we asked is, do you think your bank offers anything different than any other bank? 85% said no. What this basically meant is they felt that they could go to their bank and they would get the same product selection that they would get if they went to the bank down the street, or the bank across the road, or the bank on the other side of the city, which is a problem. That means that there's not much competitive differentiation between these traditional financial institutions. And the lines between all of them are becoming blurred and very commoditized. And this is a struggle that banks are having around the world, but it's especially acute here in China, where you have these platforms like Alipay and WeChat that are taking hundreds and millions of customers away from the banks. Further, these platforms are being used for much more than you may think. So we asked the question of these millennials, of these 1,000 millennials, we said, what do you use WeChat for? And so they were given a number of options. One of them was to keep in touch with friends or to run their business. And increasingly we were seeing, beyond just keeping in touch with friends, people were using it for work, payments, and to buy things. And increasingly people were using to actually run their business. So using these platforms, people were actually able to run their business, whether it be e-commerce. We've heard many stories of people in New York and other markets using WeChat to sell property. Increasingly, these digital platforms are being used to run not just the basic things that they were set out to be, like keeping in touch with friends, but increasingly being used for finance. So this is really changing the way that people are engaging with these digital platforms. And again, more challenges for the traditional organizations. And payments were really only the start. This graphic here shows the footprint of Ant Financial in the finance industry. So if we look at the very bottom there, we can see their original platforms were B2B, Alibaba, B2C, Tmall, and C2C, Taobao. So those were the original platforms that developed. On top of that, they put Alipay. So Alipay was initially put in place to solve a problem of trust on the e-commerce platforms. But then we've seen the platforms expand way beyond that. So Alibaba has Ali Finance, has My Bank, has big data products, has Ant Finance. And one of the more interesting parts of this, especially for the banks, is Alibaba Cloud. And in addition to Alibaba Cloud, they have Alibaba Financial Cloud, which is essentially a core banking system that sits in the Ant Financial Alipay Cloud, which is something that's very unique and something that we haven't seen before in any other markets. So while a lot of these players started out just in the payment space, we're increasingly seeing them move into these other spaces of the financial industry, causing more risks and more challenges for a lot of these organizations. One of the banks that we spoke to recently in China, we were asking them about payments and they said, forget about payments. We've already lost the market on payments. So essentially this bank that we were talking to was admitting defeat on payments. And what the executive that we were talking to said next, he said, help me figure out how I can save the rest of my business. So essentially, the horse has already left the stable on payments for many of these organizations, and increasingly they're looking for how can they save the rest of their business and how can they fight these digital providers that are coming into market. So payments were really only the start on this. So before I hand it over to Antoine, I just wanted to have one slide about why should you care. What China FinTech is doing to banks in China is classic disruption and could happen anywhere. So if you are in the Chinese market, a lot of what I've been talking about today has probably rung true to you. But if you're outside of the Chinese market, this is relevant to you because this may happen in the future in other markets. We're seeing Ant Financial and Tencent move very rapidly into other markets around the world, and increasingly we should be seeing them launch new products and services. I mean, already a good example is in India, what we're seeing with Alibaba doing in India with their partnership with Paytm. And then recently, earlier this week, Tencent announced an investment in Flipkart, which is one of the lead e-commerce platforms in India as well. So although we may be talking about China in this presentation, it's increasingly important for other markets that are going to be affected by these platforms as well. Light regulation around FinTech has helped the industry to develop in China, but current regulations wouldn't have hindered the development. There's a lot of talk that, yes, well, the regulations were specifically designed for domestic competitors and that allowed them to expand in the market, and that's why we're not seeing the same thing in other markets. While that is true to a certain extent, the reality is that none of the regulations prevented foreign players from coming into this market, at least initially. It was pretty much down to poor execution. PayPal was here, eBay was here, a number of other payment platforms were here in China, but for whatever reason, their execution was poor and they failed to grab market share in the market here. So regulations are really not an excuse for these companies. China FinTech is expanding rapidly. I already talked about that. Markets like Singapore, it's a smaller market, but it's still attractive. And we're starting to see them move into Singapore as well. Understanding customer demands and needs is key. And this goes back to the whole topic of this webinar about customer communications. Banks in the 2000s were thinking that they may not need branches. We've seen that that's been completely wrong. Increasingly, some of the questions that we asked of these millennials, although they didn't enjoy going to the branch, they wanted to have the branch there. Branches and that point of communications are still important for many of the banks. You may not understand Snapchat, but you better understand Snapchat. A lot of these new technologies and new platforms may not make sense to those of us who, remember starting using email instead of when we were in elementary school, when we were in college or post-grad. A lot of these new platforms we may not understand, but the millennials do. And so it's critical as financial industry professionals that we seek to understand what some of these platforms do so we can better anticipate where they're going. Myself, to be honest, I don't really understand Snapchat, but because it went public and because it's important to the industry, I've taken some time, I've sat down and I've tried to understand what they're doing. And that's important for the Chinese providers of FinTech platforms as well, as it's critical for everyone on this call and everybody in the industry to understand what they're trying to do and where they're going. For many years, the customer experience in China was awful. This has changed. If you look at Alipay, if you look at WeChat Pay, those interfaces are competitive with any interface that you would see around the world, and the customer experience is second to none. They understood that by making the customer experience first, they were able to capture market share, and that's what they've done. The answer may not be the obvious one. Payments were loss-making for both Alipay and Tenpay initially, but now they're leveraging them for big data and platforms to build out the offering. So if we look back at Alipay, the reason I mention this point is because if we look back at Alipay's market share pre-2014, they controlled about 85 to 90% of the mobile payments market. Tencent came along and in 2014 launched what they called the Red Envelope campaign, which basically over Chinese New Year in 2014, they encouraged people to share red envelopes with their friends and family. By doing that, they increased the number of people that had their bank accounts linked to the WeChat wallet by 200 million over the course of a one-week period. So nothing is for certain in these markets. We've seen now Tenpay and WeChat Pay have taken about 20 to 30% of the market. So whereas before we saw many of these platforms struggling, and in particular Tenpay and WeChat, which didn't have much of the market segment, they've now captured a lot. So nothing is for sure in this market. So at this point, I'd like to turn over to my co-presenter, Antoine, who will walk us through the second part and explain a little bit more about what GMC is doing in the customer experience space.
All right, thank you very much, Casper. I think your presentation is very clear. The FinTech space is making an impact in China, and that is something that we can see pretty much everywhere around the world. The main issue that we see is that with solutions like WeChat or Alipay, these guys are taking away and cannibalizing the customer experience and the branding of some of the banks that are working with them. We have an operation in China in different places, Shanghai and Beijing. When we're talking to local players there, we still see a number of different issues that they have that are very common to every bank in the world, such as managing the legacy systems, silos, problems with their organization. They also see they are confronted to problems with technology, to manage the fragmentation of technology that is rapidly changing everywhere. So we need to be able to, on the one hand, fight the fintechs that are coming there or adopt them, and at the same time have a solution to help them move their customer communication management and also the customer experience on different new platforms. One big thing is that we see a big shift from output management to on-demand, and it is what we're helping them with. Now, to do that here, first what we do is that we go through what we call an evaluation, and we look at where they are in the maturity model. There are 5 different stages. The first one is called the initial, then develop, then define, and manage, and optimize. So the initial phase is when content is really fragmented and unmanaged, where you have a lack of compliance in the documents or even the content that you're going to be sending, that there is limited response to market demand, very dependent on IT, and with a lack of control from line of business, ad hoc correspondence, and there is no real CCM strategy or customer experience strategy as a whole. Then comes what we call develop, and this is all about cost efficiencies and reducing the cost of managing the content and documents going out, and that is very true in China as well. There we see the need for using GUI-based solutions to be able to compose documents and content. We need to be able to manage the legacy systems that are still fragmented. We see a lot of templates being used, but from Word documents, for example. There is still limited personalization and a lack of visibility in the way we will be sending documents through service providers that are there, leading to higher costs as well. And last, there is a big back in projects that is growing very fast. Then comes what we call define and automated processes. The customer communication, the experience is getting a lot better there. The idea is how we can help customers or clients to move from one stage to the other. And here we have like customer communication is a lot better organized and automated. There are less CCM platforms at the back end here, and we can have a more rationalized approach in creating the content. There is better use of digital channels, but it is still limited. And then also the customer, the channel that customers will be using to communicate is not necessarily always well defined. Then you have documents and content that is well compliant, and then you have faster response to market and business demand. And last, you've got manage. No, sorry. Then you have manage, align, and this is customer expectations being aligned to the business demand. You have enterprises, the CCM strategy that is well adapted. You have a single platform for outbound and inbound communication. We are starting to leverage digital channels, social media and strategies well defined. Customer preference management is under control, and use of mobile technology is also there. And last, you've got optimized to be able to compete in the marketplace. So you have like customer self-service CCM, delivery agnostic channels and devices. You have agile to market needs, and you have customer journey mapping, you have analytics and cloud on-premise. Now, what I would like to do is to showcase 2 different examples that we have worked with. One is Credit Agricole, and the interesting part there is that you've got 39 regional banks, a little bit like in China where you have different banks in different regions. Each of these subsidiaries are independent, and the need that they have there is to use a unique CCM solution to create and deliver communications. Business users empowerment is essential to be able to manage all different channels. And last, they wanted to use CCM technology to manage personalized content on websites and mobile applications as well. The difficulty that they had they have still is a lack of flexibility with the existing solutions, and we needed to adapt CCM to the latest customer expectations in order to reduce costs, to keep like a certain level of brand consistency across all different channels, to have multi-channels and communication, digital communication, to improve the quality and value of the customer communications, to improve customer experience, and last, to grow revenue beyond traditional customer base. The main key differentiators that they find in GMC were to be able to create multi-channel layout through a single design interface, and I'm going to show you that as a demo later on, with using a low-code based solution with wizards and drag and drop components, to have an omni-channel proofing in design environment, to be able to deliver content in mobile applications, so to have mobile app capabilities, and last, to have secured and scalable architectures so that we can have a time to market that is reduced by enabling business users directly instead of going through IT. Another thing that we've done is with Fidelity. Fidelity had a painful process that was taking 1 week to process. That was managing payments transfers in branches, and the cost of managing these payments was about $1 a piece, and they had 5 million transactions on a yearly basis. The cost of that was 15 million. The idea was to rationalize this process and to make it lean so that with using digital technology, they could actually reduce this cost by a huge amount. And by doing that, we have managed to reduce the time to process a payment from 1 week to 15 minutes. We have dropping the cost of that transfer from $3 to 33 cents, and saving Fidelity more than $13 million per year. So that's just demonstrate the type of things we can do. On the one hand, we can rationalize the customer communication by bringing new CCM technology, and we can improve business processes, reducing the time to market and the customer, and improving the customer experience as we go through. Last, what we'd like to do is to show you a demo of our technology. It's just one of the tools that we are using, but this one is interesting. So with a GUI like this one, you can just tap into any systems, any legacy systems. You can process data. You can also design the output. And through a workflow that you see on the screen now, you can then process data, transform data, and create any layout that you want at the back of it. In this instance, we managed to create a loan application that you can see on the screen that now displays on all different channels, tablet, smartphones, web, and as well as paper. And the interesting part of that is that you can also proof how it works by just clicking on different tabs here. So now the designer will just go in. I know there is a little bit of a lag in the display, so I'm just going slowly. So yeah, you can see is that now it's the tablet layout, and it can be proofed directly in the screen. You can just play with widgets and just simulate what the loan could be. And that is all in one single solution. Now, what I'm not going to show you now, because it will take a longer time, is a business interface for business users to be able to operate this content directly in a web browser. With that said, I'm going to hand over to you, Caspar.
Great. Thanks, Antoine. Thank you, everybody, for listening to the webinar so far. And in the background, we've been getting questions all the way through. So I wanted to shift over to questions. There were some for Antoine and some for myself on here. So the first question I have is, what customer communications trends, I guess this is probably for you, Antoine, it's a little bit better for you to answer. What customer communications trends do you see in other regions like Europe or the US? And how do those differ from Asia?
All right. So what we see is that a lot of clients that we are talking to are in the process of consolidating the CCM platforms they have in order to be able to improve customer experience overall. And to do that, they first want to consolidate, as I said, the way they create the documents composition, but also how they're going to be moving this on the web and in mobile applications particularly. The other thing that is very important is how they can industrialize the creation of personalized content on web and mobile together using the CCM skills that they have. Now, what is different with Asia? What we see in Asia is that, as you've shown and explained in the first part of the presentation, is that already part of the population in China is well advanced in the use of social media, and actually creating a problem for some of the financial institutions as they cannibalize their branding and the customer experience. And so what we are seeing is that we need to be able in Asia to adapt faster to this change and to be able to deliver the content and the customer experience directly into the social media in the social platforms.
Great. So it seems as there are differences, there are similarities too between the two markets. There was a related question: how important is customer experience in APAC versus other markets? And we have just talked about China. Is there any other strong country in APAC? Maybe I'll take a shot at that one. I think customer experience in Asia is very critical for two different reasons. I mean, in many of the developed markets, you have very sophisticated customers that could potentially be very fickle and demanding. So that customer experience is very important, but probably even more critical in Asia when we look at India and China having between the two of them just under half the world's population. I mean, those markets are developing very quickly, and so we've seen here in China the effects of what having a good CX customer experience strategy has done for these third-party players. So, I think as Antoine was saying, I mean, there's differences certainly between the two markets, but I think here in Asia, it's almost more critical than in other markets. Okay, here's another one. With the rise of AI, so artificial intelligence and chatbots, maybe Antoine, you can take this one. Do you see a lot more banks using these type of services to help improve customer experience? So, I mean, if you've been following FinTech, I mean, obviously, artificial intelligence is really critical in the market for this year and as a key talking point. Antoine, what's the impact that you see of AI and chatbots on the customer experience?
Right. So that one is an interesting one. First, it's as you mentioned, it's something that is talked a lot at the moment. It's happening. It's coming together. Solutions are being tested all over the world. I've heard banks doing that, and one of the big drivers behind that is that there are less people going into branches. It is very important to have branches because at key moments you will still need to have these branches in order for people to go there and to talk to humans. But more and more banks are trying to get a better engagement with customers online. And as there are more touch points, they need to be able to be more efficient in the way they're going to be talking to them and interfacing and engaging with them. So this is where like artificial intelligence and chatbots are often being used. And what we see and what I've seen already happening is that very often there will be the first point of contact to qualify. But in time, obviously, we are anticipating to get these solutions carry a lot more activities and to be able to get the customer through the end-to-end of certain processes.
Great. Thanks for that. There's another question here from Tom, and so Tom asks, isn't the potential for disruption in other countries similar to that which we're seeing from China FinTech, dependent on the cooperation of financial regulators? So maybe I'll take that one. It's an interesting question. We've just completed a recent study with the UN looking at the development of payments here in China, and one of the things that we identified the regulators here in China doing is what we call a wait-and-see approach. And that's something that's interesting and very unique for the Chinese market, and I think it's something that works here but may not work in other markets. One of the purposes of that paper was to provide lessons for other markets as well, and I think the recommendation in any of this is to learn from the examples of other markets, but to not necessarily believe that everything's right for your individual market, because I think the cooperation of the financial regulators, I mean, in a place like Singapore, we're seeing very tight relationship between the MAS, the Monetary Authority of Singapore, and FinTech startups, but it still remains to be seen what the impact that will be on the market. So, you know, I think those financial regulators having the relationship is important, but maybe not the only thing for the development. Okay, so we're running up against our 45-minute limit here. Maybe we've gotten a lot more questions in the background. Let me just pick one more, Antoine, and maybe we can have you take a look at that. Okay, so this one's a little bit more specific around China. And the question is, many banks in China have invested a lot in ERP, CRM, and the multiple channel development such as websites, WeChat apps, etc. However, can the GMC solution assist enterprises to go further in customer communication and customer experience without changing the existing systems and regulations? It's a really good question, because when you think about a lot of the banks here in China, but a bank like ICBC as an example, they have their own core banking system. How integrated are GMC solutions into some of those very traditional kind of even mainframe core banking systems? Does it work across all of these systems?
Absolutely. I mean, I think that as I said at the beginning of my part here, is that we see a lot of similarities in China and in some rest of the world. What we see is that we always need to be able to integrate with a variety of different systems, whether new systems that you just recently, or legacy systems or homegrown systems, that doesn't matter. So what is really important is to be able to reconcile from data you held in these systems a customer experience and potentially like the customer communication that you want to output in a way so that it is consistent and compliant with regulation. And that is what we do on a day-to-day basis, obviously, and that is what is making success in China as well as in other territories in the world.
Great. Thank you, Antoine, and thank you for the presentation today. We're right up against the 45 minutes, so in the interest of time, that'll be the last question we take. Unfortunately, we weren't able to answer all of the questions submitted in the webinar today, but we've been busy answering many of the questions in the background, and we will be responding to you individually if we didn't get to your question during the webinar. As also mentioned during the session, today's discussion was based on the Customer Experience in China report from Kapronasia and GMC, which is now available. For more information on the report or any of GMC or Kapronasia's services, please reach out to us through one of the channels listed on the screen. We will also provide a link for all the attendees so you can download and look at the report in your leisure. We will also be posting the recording of this webinar just in case you want to listen to it again or share it with any of your colleagues. We're more than happy to have that. Once again, Kapronasia and GMC appreciate your time today, and we hope you found the webinar and information informative and helpful. That concludes our webinar for today. Thank you for joining us.